Strength and weakness are two common terms you'll hear when it comes to charting. I'm going to break them down in this video and tell you why you should look at one over the other. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Love doing these videos to bring you guys all of this information. Be sure to subscribe to get notified as soon as we post a new video, and also hit that alert bell to get notified as soon as we post a video. We do a lot of live videos. I want you to be there ASAP. So today I'm going to talk about two terms you'll hear a lot, and they're kind of ambiguous, so that's why I want to talk about them. So we're going to talk about strong charts and weak charts. One of the common misconceptions, and I get asked about this a lot, is we look at daily charts, weekly charts, monthly charts, and a lot of the times when we're talking about weak charts, people think we're talking about the weekly chart, like the 1 day, the 7 day weekly chart, the 1 month weekly chart, the 1 year weekly chart. When we're talking in support and resistance land, strength and weakness, we're basically boiling it down to an uptrending chart versus a downtrending chart. And the reason we focus on this is if we're long bias traders, if we're looking to buy stocks that are breaking out, that are pushing new highs late day, that may gap up, that may look to be swing trades that could continue for multiple days, we want to see strength. I mean, that's a green candle every day. That is higher highs or higher lows and higher highs, that for instance. So remember, know your candlesticks. We do a lot of videos discussing candlesticks, but we're looking for strength, that higher low. So each opening candle is higher than the previous candle's low, than that higher high. So the closing of the candle is above the previous closing candle. So that is what I would consider strength. Weakness is that lower lows and lower highs, a downtrending chart, which would be something more if you're looking to short sell. If you've got especially if it's a big gainer the day before, day two, that first red day, you look for a lot as a short seller, and that stock is making lower highs, getting ready to break support, that's your short area. That's your weak chart that you want to slam into on the short side. Vice versa, that strong chart, that stock that ran big the previous day, maybe gapped up day two, and then it's putting in those higher highs and higher lows into the market close and gives you that gapper. So I think it's a good thing to know these different patterns, this different terminology. May seem basic, but these things can commonly be misunderstood. If you're long bias, focus on those strong charts. If you're short bias, focus on the weak charts. And if vice versa, if you're short bias, avoid shorting a uptrending chart. You might get lucky sometimes, you're going to get in trouble. Vice versa, if you're a long bias trader, avoid trying to bottom feed. In momentum stock land, a lot of these stocks never come back. So avoid those downtrending charts. Now, in summary, what is your favorite chart pattern? You like to go long, strong charts, or do you like to short, strong charts? A lot of guys do it and get mixed results. Or are you a dip buyer? Do you like to buy weak charts? So let me know, what's your favorite? Comment below, strong or weak. And as always, be sure to subscribe and ring that bell so that you get notified as soon as we go live on the next video. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.